Happy Thursday. Here we are back again. Glad to be back. It should be recording. Let's wait till this goes live. It may take a couple of seconds. Um, yeah, here we go. I think we're live. Ooh, look at the nice logo there. The Truflation logo. Nice, nice, nice. Here we go. Are we live on X? I think we are live on X and live on YouTube. Perfect. And on LinkedIn too. Oh, LinkedIn is still connecting. LinkedIn's pretty crap, I must say. Although a lot of people love it, a lot of business folks. Here we go. We're live on LinkedIn too. Okay. Hey, everybody. Happy Thursday. Glad to be back. Lots going on every week. There's so much information. How do you process it? Do we really worry about too much, etc.? But look, let me know. I'm getting a lot of comments that if I get too energetic and too excited, I'm like a used car salesman. I'm trying to sell too hard. And if I'm too quiet and I'm just pretty normal and I just talk flat, then people think that that's just no enthusiasm. There's no excitement. There's no volatility. There's no harmony, etc. in the music. So I don't know what to do. Let me know what you think, what you prefer. Do you like the more energetic, driven sort of content, or do you like the more flat, stable, just stay cool, calm, and collected sort of type content? Let me know. We're live. Here we go. I hope we're live and hope everybody's watching. Anyway, lots going on. I think the biggest thing that we've all been watching and monitoring is this whole debt issue, right? The debt is just growing so fast, so fast. And it was funny, I was on a panel yesterday. I was speaking at an event where ultimately we were talking about the debt, right? I mean, look at this debt. I mean, it's just like actually, it's better actually to look at it here. We're just hitting 3.36.2 million trillion. What does that mean? That's thousands of billions, which is, hundreds and thousands of millions. I mean, it's like the volume and the numbers are insane. It's just we can't imagine all those zeros at the tail end of it. And it's not just the US, it's the rest of the world, right? And I think the whole narrative right now for the US is really how do we drive forward, how do we lean in, and how do we accelerate growth. It's all about the growth because ultimately the growth will help recover the decline in or the growth in debt. So yeah, growth just needs to be faster. But just looking at the magnitude of how fast this moves, it's already here. According to this, it's now 36.9 trillion, right? And so you look at that, the spending is where's the Doge? Doge has already done 506, nearly half a trillion in savings. That's 500 billion already in savings per taxpayer, 4,513. Yeah, these could be just numbers on a clock that we don't know. It's not verifiable. It's not on chain. I can't actually see the actual primitive source of data and then the composed source of data, which if you were on Truth Network, you could see all of that. Maybe we should be talking to the people and developers behind the US debt clock. If any of you know who's behind this, we'd love to integrate and work on how we can bring this data to the Truth Network. Ultimately, why? Because the Truth Network has the Truth Scan. So on the Truth Scan, you can actually go and go to the Explorer, and then you can see how you create the debt clock. We don't have debt clock in here, but I would love to have the debt clock in here. We've collateralized debt token, household mortgage debt. What's that look like? So I can come in here. Here you see the deployer, who's deployed this. So this could be the guys behind the US debt clock. It could be a debt clock index or something like that. It could be in a US dollar number, but it's, yeah, which it is. So it'd be US dollar denominated. And who would the owner be? It would be the same people as the deployer. And then you could see where the stream is coming from. I'm not sure why this isn't showing here, but ultimately, if you go to some of our indexes, you go to eggs, eggs, they're just going through an upgrade right now. So this is coming live soon. So I can look at the eggs token. Here it is. So all of these are live on a blockchain, the Truth Scan, where you've just got to that coming very soon, and it's going through an upgrade right now. So pretty excited to see about that. But ultimately, neither here nor there, debt is continuing to grow. Look at the velocity of which it's growing at. And people are beginning to realize that, right? And I think there's just a bit of a tussle right now between Trump and Elon, or Elon's a bit upset. He's trying to do so much associated with it. Yeah, and look, even the debt ceiling, they want to scrap the debt ceiling. So Trump agrees with longtime rival Elizabeth Warren on the need to abolish the debt cap. So there will be no cap. You can just print money, go into debt from an OPEX perspective, right? So right now, the budget deficit, which is basically they put a budget forward, and the loss on that budget is $2 trillion. $2 trillion a year. So imagine you have an income of $1,000 a month and you're losing, $200,000 a month because you're spending that much more than what you're earning. So that's quite a significant amount, number one. And the fact that you can borrow as much as you want. How come we can't do that? Why can't we do that? And, the government can, and nobody's scared. Nobody wants change. I think that's the biggest thing. And what does that mean? I think check out Thomas Farrer did a really cool post, right? Yeah, it was really, it's like he did a post on here, which I thought, oh, whoops, I'm not live. I missed Twitter, man. Damn it. I think we're live on Twitter now. I hope it's going. Let me know. Thanks for warning me. Anyway, I'm not going to go back on time. I'm going to go forward, right? It's immutable. We can't change the fact. Anyway, yeah. So I thought this was really good from Thomas Farrer, right? We were talking about the debt. Look at the debt ceiling. They want to abolish the debt ceiling, so there's no cap. Anybody can operate. They can run a household at a budget deficit, which means they operate greater and above their income that they're forecasting. And they want to be able to do that as much as they can. All the meanwhile, the debt just continues to grow and grow and grow. And you can see what that looks like and how fast that's growing right here, right? 36.9 million. We're going to break 37 trillion. That's 36 trillion, 940 billion, 257 million, 880,000. I mean, a lot of us don't even see the 100,000 numbers, right? Let alone the millions and the hundreds of millions of numbers, let alone the hundreds of billions of numbers. Oh my God, what is a trillion, right? This is just a number on a wall. We can't even relate to it, right? It's so abstract. And I thought Thomas Farrer put a really cool post out there. Check this out. I mean, if you haven't seen it, it's just, who saw Star Wars? Any of you? You like Star Wars? I'm not sure if this is going to get canceled because I'm talking about IP, but there's a scene in Star Wars where Watto, which is this bird here, refuses government currency because it's not real money. It's different now, right? So here, let me share what this looks like, and let me just listen to this. This is so accurate and so timely.
I have 20,000 Republic dactaries.
Republic credits? Republic credits are no good out here. I need something more real.
I don't have any.
So Republic credits. So the government credits are no good out here. I need something more real. So I need something more real than fiat. What is that? Could be Bitcoin. Ooh, that's what we were talking about the other day, or other coins, right? Some of the Bitcoin maxis think that that's the real asset. So the real asset is Bitcoin. But there are other currencies that you can use for transactions and leveraging infrastructure, right? And so those are other cryptocurrencies. But if you know him, the movie scene, he's a Jedi master and he tries to swip over. Anyway, I'll shut up and let you watch.
I have anything else, but credits will do fine.
No, they won't.
Credits will do fine.
No, they won't. What, you think you're some kind of Jedi waving your hand around like that? I'm a Toydarian. My tricks don't work on me. Only money. No money, no parts, no deal.
I have 20.
So now just try to imagine that is the BIS trying to sway and convince you through mass media that all of this is okay, right? Oh, don't worry, take my money. the Jedi tricks of convincing you that this is right and this is right. And somebody on the panel yesterday was talking about the actual numbers of people needed to sway a whole general public. And you only need about 30, 40 million people to be able to sway the general public, right? And that's what mass media have been doing. Look at what they did to tell us about Biden. Look at what they've been doing about telling us about inflation. All of these things have been here where ultimately they are defying gravity, right? Instead, the BIS, which is the Bank of International Settlement, which is the central bank of central banks, which, by the way, is a private institution funded by the bankers, right? So some 20, 30 banks finance the Bank of International Settlements, and they hate crypto. Crypto now is multiple trillions of dollars, right? And it's only going to grow. So, I mean, you just go, you go to CoinGecko, you can see up here, we're now a market cap of $3.4 trillion in crypto. And in fact, if you want an independent source of truth for crypto market cap, you just go to crypto, big Truflation, search crypto, total crypto market cap. And here we think it's 3.4 trillion, right? So exactly there, what you see. And then pulling this in from multiple sources. You've got CoinGecko, CoinMarketCap, CoinPrepto, RankingPinePaprika, Sentiment, et cetera, et cetera. So all of these are saying that it's $3.4 trillion. And how's it moving? It's moving 3.39, 3.31. So ultimately, $3.4 trillion. So you think the banks and the central bankers and the central bank of central bankers are not going to like Bitcoin. They do not want this. And so there's a good video put out, I can't remember who by, that I saw. I was watching this, but here you can run this through, right? We investigate the trends and drivers of cross-border flows of two major native assets, Bitcoin and Ether, and two major assets in stablecoin, Tethercoin and US, across 184 countries between the years of 2017 and 2024. And they haven't, it's like, look, these flows are substantial, peaking at around $2.6 trillion in 2021. So I don't know what they're using, but with stablecoins accounting to close half the volume, the unique bilateral data allows us to estimate the drivers of these flows in a gravity framework and how they differ across different types of crypto assets. Our findings highlight speculative motives and global funding conditions as key drivers for the native crypto asset flows. Transactional motives play a significant role in cross-border flows for stablecoins and low-value Bitcoin transactions, where we further find a strong association with higher cost of traditional remittances. Where we find a strong association with higher costs of traditional remittances. I don't know what they're trying to say here. Geographical barriers play a diminished role compared to the traditional. Yeah, so it goes across borders, duh. Capital flow management measures appears ineffective. So their desire to monitor and manage and restrain capital flows are proving ineffective in a crypto world. What does that mean? The user experience with crypto is far better than what we're experiencing in the bank. And I can tell you that right now, using a physical bank to transfer within from one same bank account holder to another same bank account holder in the same jurisdiction or the same nation is T plus 1 day. If you want to do it the same day, you have to pay a premium. I have to pay a $5 premium to do same day transaction. I have canceled all my bank accounts. So I don't know, it's just crazy. It's unbelievable how they still live in this archaic world and they prime themselves. Oh, we're the best banking facility. And here we're the biggest central bank of everything. And I think they are going to feel very threatened by crypto. You can see that where the ECB has already complained. They're trying to do their CBDC. None of that's on public blockchains. You won't be able to see any transactions, what they do. I would love to see budgets by non-government associations all on the blockchain. Money in, money out. Where's the money going to? Which wallet addresses? Who owns those wallet addresses? Don't worry. You don't need to tell us who owns those wallet addresses. Chainalysis will find out those wallet addresses for us. So don't you worry, right? I mean, that's the beauty of transparency. They don't want that transparency. They don't want that level of accountability, right? I just saw Phidias on X where he's talking about how much money the local European bureaucrats get paid just for going to the office. Imagine you get paid a salary. Now you go to the office, you get an extra $350 or euros to go to the office in Europe. I mean, pretty amazing just for going to the office. But anyway, you can see here that this is becoming a big concern because they sure don't want this movie becoming a reality, right? They don't want to be able to hear, that it's not real money. And by the way, they're all going into debt. And we know that Europe is really struggling, at least sort of the US, there's some sort of prospect in terms of growth. But in Europe, they've just reduced interest rates again. Boom. And no wonder that the euro is getting stronger. Just kidding. I mean, yeah, it's not about getting stronger. The ECB just dropped interest rates again today. Bang, 25 basis points. So constantly going down. And, so what does that really mean? And how does that impact where we're going to see the Fed come out? Right now, there is a big couple of weeks coming up in the US, right? So I can come across over to here and you can see in the economic calendar from Truflation. Oh, damn, you go to Truflation. You can see here all these data sets that are coming. You've got employment situation. There was an employment number that came out yesterday. We'll talk about that a bit later. CCI in India on Saturday. Survey of consumer expectations on Monday, labor market, CPI on Wednesday. So stay tuned. We've got spaces on Tuesday around the CPI and our forecast on that CPI. So again, the accuracy at Truflation, pretty good, eh? It's better than all of the others. You've seen the graphs. I've shared that with you. So stay tuned. Join us on Tuesday. Follow us on Twitter. Follow us on YouTube here to get the latest news. I'll be doing my broadcast here on Tuesday. And then right afterwards, we'll be having the Twitter Spaces. And hopefully we'll have some really good guests this time as well. Again, right? And then we got the PPI coming out. And we got FOMC meeting. But the funny thing is, have you been hearing this, that the BLS has had budget cuts and as a result are stopping to report some information? Shouldn't they be using Truflation? The Truth Network, that's what's giving them the real-time, transparent, immutable, on-chain, real-time inflation metrics. Maybe they should do what Argentina is doing, using Truflation as the source of truth for holding the government institutions accountable at a much, much more benefit share-y cost. Anyway, there you go. There's a lot of stuff coming out. Ultimately, also, there's an FOMC meeting on June the 12th, and then there is the inflation announcement. I think is that on June the 12th? The inflation announcement is on... When is the inflation announcement? Is on June 18th is the settlement date. So there you go. And you can see people are not expecting a change. So 97% expect no change in interest rates. I don't know. What do you think about that? Let me know. Put your comments put your thoughts in the comments, please. I mean, let me know what you think. Do you think we should? Our view is right now, the Fed is getting so detached from reality. All of these central banks are going to make themselves obsolete in a world where stablecoins rule, and all the banks will be able to mint stablecoins using treasuries. You know my beliefs there, that we're going to see more stablecoin minters. The stablecoin minters are going to own more treasury bills than anyone else in the very short-term future, just because that is such an attractive opportunity. So that's happening. Not only is Polymarket thinking that, FedNow or the FedWatch from CME Group is also thinking the same, 97.4% of the market based on a survey that they do. And you can see how that's changed. It's changing less. I mean, it was 72% a month ago. Now down 97.8. Now it's 97.4. But it's still ultimately super high in terms of the market not being able to think. Now let's have a look. What happens if you bet here? I want to buy that there's going to be, and let's put in $10 here. What does that return? Wow, $344 return. If you go and put $10 on a 25 basis points decline, you'll get $344 return. Good odds, I think. What happens if I bet on a 50? Last time he did a 50 basis points, right? That's $2,000 return. I don't know. To me, these odds are better than buying a lottery ticket. I mean, ultimately, you don't get $2,000. You may get $20 million, but the odds are far greater here. Will Powell do something wild, wacky, and crazy? Who knows? He did it last time. He's done it before. Let's see. But yeah, I mean, the markets are not looking very good, you know, if you think about it, right? So initial claims up 247,000. So these are people jobless reports, and the forecast was 235,000. So there are 10,000, 12,000 more jobless claims than the market predicted. So boom, okay, that means that more people are unemployed. And the CEO confidence is down. What does this mean? And it's way down. It's not just down a little. Look at this drop significantly, right? And what does that mean? Basically, CEOs in companies are concerned. They are expecting a recession over the next 12 to 18 months. So yeah, it's just not looking good. CEOs named geopolitical instability. Oh, I'm not sharing this tab. Sorry, guys. Here, CEO confidence. We're looking here. CEOs named geopolitical instability followed by trade tariffs as the two top business risks impacting their industry in Q2. Regulatory uncertainty followed close behind by the cyber risks, which dominated CEOs' concern over the past 2 years, dropped down to fourth place. As in previous quarters, a majority of CEOs indicated no revisions to their capital spending plans over the next 12 months, still consistent with more pessimism about the outlook in their own industries. The share of CEOs expecting to revise down investment plans doubled. Wow. So people are really, most CEOs anticipated no change in the size of their workforce over the next 12 months. How easy is it going to be for these guys to get capital if they need to expand, if they need to invest? In a world of AI, the world is moving forward. And we talked about that yesterday on the Power Ledger panel. I was there with Solana, with Lily Liu from the Solana Foundation, Gemma Green from the Power Ledger, Ralph Glabishnik, who I did a podcast with. Check out the YouTube. He's one of the OGs in Bitcoin. Really good panel. And then we had somebody on AI and somebody on mobile cloud computing, decentralized cloud computing. So pretty interesting conversation with a very diverse set of infrastructure providers. But either way, the conversation there is we all need energy. We need 90 gigawatts of energy. How are we going to get that? And what is that investment cost? How do you, as a CEO, get your business to think more AI, convert your operations, increase your productivity to leverage AI to do and can automate a lot of processes, get things done. But be careful with AI right now. And if you don't not start now, start tomorrow, because the rest of your life starts today, right now. And in order to get up to speed, you're going to do that, because if you don't, the guy next to you will, or the company or the girl next to you will on the other side. So somebody is always going to be leveraging this to their competitive advantage, and they may be in the same field as you are. And that has a significant disadvantage. That is the downside, upside, betterment of competition, right? And we all have to deal with it. And so how do we keep up with it, right? There was a really good post by Balaji where it's talking about prompt engineering versus verification. So it's so it's actually prompting versus verifying, right? So that's something that I thought was really interesting. Why is that interesting? Ultimately, because you can scale prompting, but the verification to make sure. So check this out. This is really important. AI prompting moves to AI verifying. AI prompting scales because the prompting is just typing. So you're just putting in something and then they spit something back, right? But how do you verify what they're giving back? What are they, so here he'll talk about, but AI verifying doesn't scale because verifying AI output involves much more than just typing. Sometimes you can verify by eye, which is why AI is great for front-end images and video. But for something more subtle, you need to read the code, the text deeply. And that means knowing the topic well enough to correct the AI. Researchers are well aware of this, which is why there's so much work on evals and hallucination. However, the concept of verification as the bottleneck for AI users is under discussed. Yes, you can find formal verification or critique models where one AI checks another or other techniques, but to even be aware of the issue at the first class problem is half the battle. For users, AI verifying is as important as AI prompting. So there you go. And so he talks about it and looks at it. So I spend more time verifying AI output than prompting. I find that ChatGPT is solid for brainstorming. So anyway, everybody's commenting on that. You need to know these things, right? So if you don't start with AI, if your business isn't using AI, you're at a significant disadvantage. And I would say, get on it, start now. Not that I'm telling you how to run your business, but maybe that's why a lot of the CEO confidence is down. And yeah, ultimately, how do we increase productivity? Because everybody in tech that I meet, they are super excited. They are uh, very pro growth. They're seeing lots of opportunity. They're seeing an increase in growth. We even actually believe that there will be GDP growth to a significant amount across the US market, which is the biggest economy in the world and by far, and that will have a significant impact. So, but alas, some of these CEOs are worried about recession. And if you go to Polymarket over here, you can see 74% believe in a recession coming in 2025, and only maybe 30% have bet on the fact that there won't be a recession in 2025. I don't know. I think these are very short-termist. Whilst we think prices will increase just because of the amount of investment that's taking place and the rollout and the printing of money supply, as you saw on Tuesday, is at an all-time high. So M2 is now max cap, right? So check that out. But yeah, so what do we need to do to avoid a recession? That's really what we're trying. And so I think one thing that really gets me going is there's really around the debt, right? We were talking about the debt. We were talking obviously the debt, and we were talked about interest rates. Powell coming on the June 18th. On the 12th, the FOMC have their meeting, and then they'll decide and announce interest rates hikes or declines on the 18th. So as that happens, what does that mean? All of this is coupled with paying the money on the debt that is owned. So there's 36.2 trillion or 36.9 according to the debt clock outstanding in debt. So that's nearly $37 trillion in debt. So if it's $37 trillion in debt, what does that mean? And so I was looking out there, there's this interesting paper that was put together by Ferguson. Here he is. Sorry, I didn't share Ferguson's Law. So this is Ferguson's Law, and who participated in this was Niall Ferguson. But apparently the Ferguson's Law is by another Ferguson that's not related, but most probably some Scottish guy as well, which is really around debt service versus military spending. And I'm going to show you a quick video on what he talks about. So here, this is Niall Ferguson, who's a professor at the University of Austin in Texas. Not the University of Texas, Austin. It's the University of Austin, Texas, which is funded by Joe Lonsdale and a number of other tech experts. It's really very popular school, a lot of critical thinking there. Used to be at Stanford, an economist over there. And so listen, I'll just let this play for a little bit, but listen what you think. So if you can't tell, he's Scottish, right? So yeah. So here you can see, I mean, I won't go into this, you can watch it yourself, but here you can see they are projecting that interest outlays is going to be bigger than defense, right? Yeah, I mean, ultimately, you can argue the cost of defense is coming down because it's becoming much more technologically oriented, using AI, so it's self-learning. So there are a lot more productivity gains. That's one argument that you can have. Ultimately, you know, if you listen to my podcast with Pompliano, Anthony Pompliano, we talk about the fact that don't bet against the US and sure as hell don't bet against the internet. And right now, all of these on-chain activities are all on the internet, running on the internet. And that's where we are creating these new financial services, these new financial instruments that are replicating and allowing, enabling a lot more creativity, and time to market is a hell of a lot faster on the internet. And thanks to decentralized networks and smart contracts, that the protocols can be self-contained and self-governed with government participation. But either way, oh, I didn't even share this tab with you. Sorry, guys. But here's the video. You heard it. I didn't share it with you, but here you can see, here's the graph right now. For the first time, it broke through. And then here it projects out into the future, 2052, where it just continues to go up, which is net interest outlay. So this is just servicing your debt. It's not even repaying the debt. It's just servicing it. What's the interest rate associated with that? If Jerome Powell doesn't move the interest rate, it just keeps costing money. And nobody wants change. Nobody wants Doge cutting costs. Everybody complains about cutting costs. How do you rapidly cut costs? Identify where the costs are. The biggest complainers get the attention. So maybe we switch those costs back on, but you shut it off first, and then you see where it's bleeding, then we go and fix the bleeding because that's where it's really hurt. If it doesn't bleed there because you've cut it off, great, you've saved that money. And you start with cents. Cents make dollars. Dollars don't make sense. Especially not the way the dollars are being printed right now. But anyway, that's something to look out for. And I think just coming back to, you know, faith in the system being broken, right? I mean, we are seeing that really come in, right? And we really are trying to bring something to you with the Truth Network where you can trust the truth, right? We're revolutionizing data trust, really. That's really what we are trying to do here at Truth Network. How can we make, and with Truflation being one of the applications, index.fund being another, the Nuon max cap token and the proposition there is just another. And we're seeing more and more. You can now go to limitless.exchange and trade on any of the indexes that have been created by Truflation. You can go to Cultured on the Plume blockchain and leverage and trade any of the indexes there. More and more coming. Every time you access and use these indexes on those chains, on those exchanges, on those prediction markets, you pay in truth. So that's the utility of the truth. but ultimately anybody can go and access any of the data, combine and build their own index using the SDK if you want, or just simply using a nice front-end interface like index.fund to be able to do that. But ultimately, what we're trying to do is revolutionize data trust. What Bitcoin's doing to money, truth is going to do to data and to trust. So have a look at that. How are we doing that? We're building out tool sets that are ensuring, number one, Byzantine fault tolerance. So we have with Roadrunner our own consensus algorithm to verify the data, as well to verify the calculations on chain. And the beauty with our chain being in PostgreSQL, you can actually query directly to the chain. You don't need to insert a graph, pull all the data, store the data, compute and query the data, and then, figure out what you can do to rewrite and program to that data. No, 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 no. All with the SQL smart contracts. You can do that all on chain with the Truth Network. How simple, how much time do we save you? And that's what we're trying to do. And you can call this a sales pitch, which it is, because we've been investing heavily to make this possible. We started with Truflation, we built out the Truth Network, and now this ecosystem is growing around the data that we've aggregated, the trust that we've built are associated with that data. All these applications are going to be building on and around that. So we're pretty excited about that, as you can tell if you didn't. But yeah, here again, my podcast with Pomp. So go check it out. You can find it directly on the website. Bitcoin versus TradFi, no brainer. So here we talk really about the value of the assets, right? So in essence, bet big, bet on one currency, on Bitcoin. All the treasuries are seeming to do so, from Metaplanet in Japan. I talked about them last Tuesday, so you know what's coming, but there's a lot coming. And so ultimately, we're just really trying to bring you better services, better trust in the data, and you can choose how you work with that data. Have a look at that, and hope you find this. If you have any questions, you know where to go. Subscribe to our channels, follow us. You've got a newsletter here that you can follow. I'm sure, bang, sign up here. Just put your name in there, follow, super easy. We just try to bring you more and more content and play around and access all of the data available there. Like I said, we're going through an upgrade right now, and all of that will be settled very soon and should be going live this week. Yeah, that's pretty much it. Just wanted to share that with you. Hope you enjoyed this. Happy Thursday. Join us on Tuesday. We've got the smart spaces coming out associated with the BLS number. We're going to have, I will do my AMA again on Tuesday. Let me know if you have any questions. Not many questions today. Look, if this is too much for you and you don't like it, let me know what you think. Should we do more often, less often? I think we could go to twice a week, because this does take a lot of time to prepare. But there's so much going on. I hope you find these interesting. Give us more likes. Subscribe, because that helps with the channel and getting more visibility. And again, helps grow the truth community. And we have a whole bunch of truth seekers out there helping us find and be the eye of truth. Follow us, sign up. Thank you, everybody. Have a great weekend. I'll catch you on the other end and pick you up on Tuesday, where we'll be sharing our prediction on inflation, giving you an AMA as well. And then we'll see you on Wednesday at 8:30 in the morning when they have their print. But ultimately, who cares? Everybody's using Truflation anyway, because why? It's 45 days ahead of everything else. We know one thing, and I can tell you now, inflation is going up. Why? Because for the last 45 days, it's been going up. So I think we can pretty much predict it's going up. And I think, what did the prediction markets again saying? Where are they? Where is inflation? Where is inflation? Here we go. Fed interest rate decisions. There was that. Actually, let's just go to inflation. Inflation annual May. Boom. Here we go. What are they saying? Ooh, there you go. It's all pretty much. It's 2.3 right now, right? So everybody's predicting up 2.4, 2.5, 2.6, and you'll have to follow us and subscribe, sign up. If you're a paying customer, you got a webinar. If you're a enterprise customer, you get one-to-one hands-on time with Oliver and our development community, our data team. And then otherwise, join us on Spaces, where you'll find out what we think the actual number will be. And then you can place bets here. Let's see, if you bet 2.6, what do you win? How much is the win at 2.6? Let's put $10 on that, $74. It's a pretty good return. That'll pay you a meal. So don't pay $9 on the Starbucks coffee that you're going to buy. Pay and then put it here, get $74 return, and you'll save the money on a coffee. And if that's too risky for you, just buy it at 2.5%. It'll pay you $31. So total betting volume is really small right now. It gets higher as we get closer, but it's now $650,000. Anyway, everybody, have a great weekend, and I will see you on the other side. Thanks, everybody. Bye for now.